next panel discussion on the convergence of payments, credit, and social commerce. I take this opportunity to welcome Ms. Aditi Mathur, Lead Business Messaging, Payments Meta, our moderator on stage. A warm welcome to you, ma'am. And to join in the panelists, we have co-founder Credilio, Mr. Sandeep Ghule, to join on stage. Mr. Sandeep Indurkar, CEO, Resilient Payments, BharatPe. A warm welcome to you, sir. Mr. Aditya Soni, CEO and founder, CheQ. And Mr. Abhishek Arun, President, Platform Strategy and Commercialization, M2P Fintech. Ladies and gentlemen, thank you for this round of applause. And that's about it. We request Ms. Aditi to lead the conversation. Thank you.
Great. Thanks for the quick introductions. I think super excited to be here. It's an opportune time to discuss about the topic that we have with our esteemed panelists here as well. And just a quick sort of brief, right, to frame some context for why we are here and discussing this and the criticality of the topic. So I think India is definitely witnessing an exciting time, right? We're at an inflection point where payments, credit, as well as social commerce are not just running on parallel tracks, but actually converging together to create a more seamless ecosystem. And really what we mean by that is just imagine as a consumer, and this is already happening today, right? You go to Flipkart, you are looking to buy an iPhone, you put it in your cart, but don't complete the checkout at that point in time. You get a nudge on WhatsApp to say you have an offer that's on right now on the iPhone. Do you want to continue to make the payment? So you continue because that's a good offer. Then when you reach the checkout page, at the payments page, you get additional offers from different UPI players. You may get a BNPL offer that actually is customized to your needs, right? And that really enables you to complete the transaction and finally make that purchase. So that's really what we mean by the entire convergence of these three areas coming together. And while we've made a lot of progress on the digital payment side with 200 billion transactions happening annually, there's still a huge gap when it comes to credit, right, and accessibility of credit. Millions of consumers and SMBs are still facing those issues and the gap. And what we've brought this group together is really to discuss how the convergence of these three areas can help bridge the gap. So I'll just start off with Abhishek from M2P. Quick question to kick it off, right? There's embedded finance has become the buzzword, right? So how do you see it, shaping up in like practicality, and really what's been the driver of this growth?
I think this is happening across today. Every player, whether it's a commerce player or any kind of platform which is servicing a customer, which is either a merchant or an individual customer, has an embedded finance journey possible. There is, and RBI has also clearly laid that out from an LSP and a financial institution perspective. So there is a distribution game, and there is somebody who has the real license. In some cases, both are with one person, but in a lot of cases, it's separate, and that's the way it should be, and people will get in their power. So people look at it from their perspective. So for example, a Misho will say, BNPL for me is competing or translating into cash on delivery to be changed. Okay, so if BNPL comes in, cash on delivery will go away, and I'll be able to offer that. For somebody else, it'll be a value-added service. For somebody else, it'll be financing the next product or sale which they're trying to do. So this is going to be mainstream business. And with time, and as we're seeing it across the board, financiers, bankers will power a lot more of this. And consumer-facing brands will use this across the board. And technology platforms like us, or they can be created by the companies themselves, or possibly take it from us. And there's many more options like that, which is many to many, which is many platforms where distribution is there and many players on it. That's the way we see this kind of evolve.
Super, that's interesting, because that's a little bit of what we're also seeing across the social platforms, where they're very custom and very targeted offers and options that are provided to consumers to really make the entire journey happen. So moving on to Sandeep from Credilio. We've seen a lot of credit discovery shifting from really pull, where consumers were and borrowers were reaching out to banks, right, to push now, where a lot of alternate data is available, and you have real-time offers, etc., that are being given to users. So just want to understand what's really driving this change, right? And are we really reaching out to new to credit users, or are we just availing or providing more services to existing ones?
I think that's a very good question. Firstly, if you look at data, it's absolutely right that in last 5 years, the consumption of credit has very decisively moved away from a push mechanism to a pull mechanism, right? In our parlance, we used to talk about assisted modes, right? So 5 years ago, I would say that at least 3 out of 4 lending products which were disbursed had some element of assistance into it. Today, if you look at it, that actually has come down to 1 out of 4. Right? And so it's a clear change that has happened. So to your question, why this is happening, right? 4 or 5 large parts come to my mind. One aspect which is very clear is the awareness that consumers have today. Today there is a large, scale movement which has happened in terms of consumers being aware of things such as their credit profile, their credit score, also having different products available. And the digital ecosystem has certainly helped to build this particular awareness. Second part is that if you look at the Gen Zs and millennials or so, consumer behavior is they don't want people to sell things to them, right? It's more belief in self-discovery. And that self-discovery is happening across all the e-commerce platforms, all the social media platforms, so on and so forth. The third part, which is again very important, is the way the ecosystem has got developed to allow a pull-based seamless onboarding of products. And that's where, Abhishek mentioned that, there are a number of players, ecosystem players, which have helped to do that. So consumers are able to do it. Fourth part, I would say that regulatory is also, if you look at the guidelines today, it mandate a specific consent from customers in a digital format, right? And there are privacy laws in place. So across all these things, it is again a push, more movement which is happening towards a self-consumption, and which is where the pull-based mechanism. And the fifth part, I think, is the embedded, way the finance is happening, including for a company like ours. Today, we power credit card onboarding in most of the D2C apps. And that is also helping people to discover products very easily on their own. So to sum it up, it's a combination of consumer awareness and the seamless digital ecosystem, which has helped in this migration from a push-based to a pull-based credit discovery.
And I think you touched a little bit about it, right? Like all of the consent as well as all of the controls that are also being put in place. But just a follow-up question to keep up with the flow is, with instant loans that are being made available, right? And everything that's now available digitally, how are you balancing instant loans with sort of responsible lending as well?
No, thanks for that. I think it's a tough question, right? It's a big ask from a numbers point of view. Today, on one hand side, we look at 450 million consumers who are using UPI. But if you really look at it, it's only 1/3 of them probably have a larger access to unsecured lending products. So at our level, we are trying to do a couple of things. One aspect is that we are helping consumers build their credit profiles. So using FD-backed secured credit cards is what we partner with banks, where we are going to underserved customers, allowing them to seamlessly set up a credit product, which starts at a very small FD amount. And as they start building their repayment history and credit history, it allows us to work with lenders to give them access to larger credit products. And because we believe that while there have been a lot of attempts being made to use alternate data points, today you cannot replace the consumer's actual data of using a lending product and repaying it. Because that is extremely, so as a country, we need to build much larger base of that data, which is actually lending products, and that's how you can democratize access to credit.
And that resonates because you're actually guiding them. In a way, it's still assisted. While it's a lot of push products that are going there, you're actually, since these are new users, you're really helping them come into the fold and guiding them to responsibly take on those lending products that are available. So moving on to Sandeep, right, from a BharatPe lens, right, and shifting gears a little, looking at it from a merchant lens, just also wanted to understand how are the trends or adoption trends differing from the tier 2, tier 3 markets versus metros, right, that we are seeing? Are there certain behaviors? Are the Bharat markets actually leapfrogging when it comes to credit compared to payments? Is there a difference that you're observing?
In tier 2 and tier 3, the way the payment happens is very different than what it happens in metro. For metro, it was always an alternative. Digital QR was always an alternative to cards and net banking. Whereas for Real Bharat, actually, it was a leapfrog from cash to QR. And the challenges what the Real Bharat face is basically in terms of credit. And the main reason behind is that they don't have a formal collateral and a long credit history, bureau history. And because of that, it is not easy for them to get a credit. With, say, for example, when BharatPe onboard a Kirana stores, right? We see his journey from month one, his collection growing from 20,000 to 60,000. We get enough footprints of that merchant, and we know what is his repayment capability is there, and accordingly, we do a working capital finance to him. So that in this way, it is actually helping the Real Bharat actually to scale and grow the business efficiently.
That's helpful. It's looking at it because you have the data available on what are the transactions and what's the sort of revenue that's being driven for these merchants, and then driving credit and products accordingly. So what's also one of the single most powerful innovation that you've seen for SMBs when it comes to conversational and social platforms?
See, social commerce is exploding, and if you see homepreneur selling a pickle on WhatsApp, or a Kirana store taking an order on Instagram, or anyone selling on any of the social link. The real challenge is, one is payment. Payment is not deeply integrated, and sometimes customer drop out mainly because of the seamless payment. Second is credit to such type of merchants. Main reason being they may not have the detailed footprint. And the third part, what I see is, where the real efficiency should come in, is in terms of smart billing. I had seen a lot of merchant at the end of the day taking stock what to order, right? And it is a very manual process. So what I see is the real leapfrog happen when, see, a Kirana store is actually selling his goods on a social platform, and there he sees a BharatPe QR or BharatPe payment link, and the payment is getting converted immediately, or he gets a credit options for the consumer to make the payment, and the billing is being done. He knows it may not be a formal ERP system. It could be just an SKU being tagged and invoice being made. At the end of the day, he gets the negative billing of what goods was sold end of the day. And that could be ordered on a real-time basis using a direct tie-up with the stockist or ONDC. And all this will have enough detailed footprint about that consumer, and thereby he gets an efficient credit. So this is what the complete ecosystems can grow, and the merchant will also be able to grow very efficiently, because we bring a lot of efficiency in his entire thing, selling to payment, then to inventory, and then to credit for growing his business.
Yeah, that really resonates, because even as WhatsApp, we have, not sure how many people here would know, but we do have a small business app. So that's largely for the Kirana stores, where we've enabled QR codes. So any QR code, it could be a BharatPe QR code, could be added for the merchant on their profile. It's actually helping make digital payments, and increasing that penetration, but that constant ask and need for them to have more recon and settlement and, the right kind of sort of software to do that versus the manual way that they perform it today is still there, and that's a gap. So that's helpful to see because you need multiple different players, not just social commerce, like you mentioned, but players that are providing QR code, and then also the TSPs really providing that entire CRM ecosystem to the Kirana stores as well, and could be a more different sort of product that's targeted towards them versus the enterprises that's required. So Aditya, moving to you from a customer lens and customer perspective, what does invisible checkout, right? There's been a lot of talk about that, and everyone's trying to create more seamless experiences and journeys, really to keep the customer in their apps, right, and drive payments end to end at the end of the day. So what does seamless checkout really look like, and how far are we from it, right, as the norm right now?
Good afternoon, everyone. Thank you for coming in straight after lunch. Maybe we can first start with defining what invisible checkout is, purely from a consumer lens. I think invisible checkout does not mean absence of transaction. The consumer is fundamentally looking for absence of friction in this. Even today, with the best technology that we have, we're at least either switching apps to enter a PIN, or waiting for an OTP to finish a transaction, or to doing a 2FA authentication to do the most basic needs, correct? And to me, that part of the problem still continues to not be solved. From where we are to an invisible checkout, I think what we need to understand is we're at least 50% there. I think what UPI has done is that it has raised the bar of consumer expectation extremely high. The consumer want the transaction to happen instantly. It has to be driven by his or her phone. Interoperability is now the bare minimum expectation. I think the large part of the next part of the journey is more psychological. I mean, even in this room, we still believe that if there are more authentications happening, the transaction is more secure, the fraud will not happen with me, correct? I'm a proud ICICI Bank customer, and I somehow always feel that the grid works. The grid behind the debit card completely works. I will never have a fraud. But when you come outside and when you start building companies, saying, why the hell does the grid exist? Okay. And the psychological part is what we need. I mean, any platform, from the likes of what he is doing to what he is doing, is to build that trust into the user, that while friction is going away, his or her control toward the transaction is not going away. I think to me, that's the large part of the journey that we still have to worry. And because UPI is still so young, 5-7 years old ago, like today also we have limits on UPI. And while the regulator does it for all the right reason, the consumer sometimes feel, oh, maybe more than 2 lakhs is not a very safe thing for me to do. Therefore, let me go and do it from bank account, correct? So for everything that we as parties of whether building an organization or building regulations, there is a very different interpretation that a consumer takes from that. And that journey of fundamentally embedding what we want to do and what the consumer experiences, to me is the large part of the problem that we all need to solve to make the journey invisible, correct? Like when Amazon launched like just a natural checkout journey where you can just pick up baggage from the store and just walk out, it felt so disruptive. And the fact that it's been 5 years and still haven't been able to emulate that in India, and not for an Indian company to do it, I think is a great starting point for us to do. So to me, as I said, UPI has helped us a lot. Still a lot of psychological wins and more cross-pollination, if that was with the right word. If today I go to Amazon, if I tokenize my card, and if I go to Nykaa tomorrow, I have to tokenize the same damn card. And all of these are opportunities for where we will fundamentally move to a sort of an invisible checkout. So like that's where I think we are.
Yeah.
I just want to add something. So from a technology perspective, tokenization, all of these biometric, all of this is now blessed by the regulator, available. It's one, like he said, about customer psychology. The other one is it is, it's federated into multiple units. Is there one player which will kind of hold fort, and I don't need to do it in every checkout place, tokenize my card separately, or it'll be one. Though that is a journey which will kind of happen. The second two points I just want to kind of add given the topic here. We're talking a lot about powering of all these platforms from a payments perspective. The other thing is that the payment players or the checkout is also a place for new customer or new business for the discovery. The discovery part of these businesses or merchants is also something which we should possibly think of. Today, a QR code, when you scan it, it's all about a payment. The same QR code over a period of time could also embed the inventory or various other things. So where NPCI is today on from a payment standpoint, there is a discovery piece as well, where the business gets pushed to a particular merchant just because there is a QR code, there is WhatsApp, there is messaging. So it's not a one-way street. There is the other side as well. Payments can also lead to customers coming to you, and credit is also one very important element in kind of removing that friction of buying something more. One piece which possibly can also be added when you asked about new credit or new customers coming to credit, large distribution players are also doing FLDG. They're putting their skin in the game, getting their customers onto the platform, because the risk which large banks feel is, will they be able to collect money from a customer where there is no credit score, or they don't, or the ticket size is very small. The ability to collect with the ticket size is small. So things like a BharatPe giving advance against settlement from a small merchant and being able to collect because the next day money is also coming in. Those are unique things in the market which help customer to build a score, or he spoke about the secured card, and those are like building blocks. So from the financing world, the technology world, a lot of this is available. It's just kind of marrying various ecosystems. So today you're seeing the large e-commerce players getting into this. But I believe that tomorrow, why not a logistics player who's actually delivering to somebody's house multiple times? Why are they not in financial services? Or why are they not doing some of these with digital, KYC and all of those things available? Sky is the limit in terms of whoever is coming to your house, whether it's Netflix or somebody delivering something, or the Swiggy guy coming in. All of these are people you're interacting with, and there is a possibility to utilize some financial service in some form and shape.
Yeah, I think that's super helpful because you spoke about both perspectives, right, on the consumer side as well as the merchant side. And I think what's important is also the consumer perception, and what really they view as trustworthy, etc. Because that's where, while we are building, as the industry players, building a lot of these experiences to remove the friction and make it more seamless, is that the same way the consumer is viewing it? Is it still secure enough for them to really transact on that platform, right? What hoops are you jumping in order to enable this, that may be cutting corners in their mind? So I think it's important for the players to come together and standardize these experiences as well, right? So that the consumers are also viewing it happening across the board. It's not a one check or M2P, etc., doing these experiences in silos, and help build that trust for the consumer as well. And actually, since you spoke about all the different players coming together, Abhishek, just wanted to talk to you also about what are some of the, what's the most sort of interesting sort of partnership model that is evolving here, right? Between like fintech players, between the banks, etc. And how are you seeing that sort of shape the entire sort of monetization models here?
So, there is no one model which will work for everybody. There are banks which have large customer bases. They think of the same thing very differently. There are banks which are very small customer base. They work a lot more on the partnership side. But the jury, in terms of this particular thing, that judgment is or verdict is very clear that banks bring in the risk, fraud, regulatory. And when I say banks, it means any financial institution which has a license. They bring in that particular knowledge. They will work and partner with anybody who has large distribution. Distribution is not something which is the first and foremost forte of any financial institution. And even if it is specific to a financial product, which is not something which every day I or any citizen gets up and say, oh, I'm looking for a loan. There may be situations where I need a loan or a particular product, but I'm not really thinking of a financial product every day. But I do need to work with distribution. So that part is very clear. It's just the roles and responsibilities and how this kind of will play. RBI, from a payments, lending perspective, has defined a lot of things, which is where the trust factor and fraud and some of those things have come in. But it's just not RBI, it's also insurance, it'll be broking, it'll be wealth management, so on and so forth. So this is an intrinsic part of how the world will be as we go forward, working very closely with distribution powerhouses and the reverse of it, which is distribution players also thinking that this could be a large, revenue driver for them. And that's something which they will also invest. So we're also seeing a large distribution houses also going for licenses on their own. So it's an interesting mix. So do we foresee tomorrow a bank buying a, e-commerce player in India? Not really, but internationally, if you look at it, a lot of that is something where, has happened. So it's an interesting mix, and we'll continue to see. And the fact of the matter is Global Fintech Festival has large banks having stall. 4-5 years back, where would you have kind of thought of that happening? So the proof of the pudding is you go down, you see more bankers than fintech players.
Yeah, I think I would agree to that. It's definitely interesting to see the banks and fintech players coming together, and banks also building their own, focusing on building their own UPI apps and making those experiences a lot more seamless now. So I think, a question for all the panelists. We spoke a lot about, the industry, what's working, what's not. For your specific businesses, what's the one challenge that each of you are facing when it comes to sort of, thinking through providing seamless experiences and differentiating your product in the market?
I can go first. There are significant advantages of standardization, of having a few governing bodies which sort of drive this. To me, it in some ways also restricts innovation, where there are enough institutions who sort of come with the thought process that they want to build up a technology stack, and they would have it their own way. You just talked about the fact that you won't want an M2P to only do it, or a CheQ to only do it, or somebody else to do it. But if you want true R&D to happen, true investments to happen in building new technology, you need to provide an avenue where you can reap the benefits of it. And it does not get sort of standardized under one common umbrella, and that's the only mode of then operating for that business. I think it takes away the sheen from in investing completely new solutions, and then you're just waiting for a couple of bodies to sort of innovate, or else best you build wrappers on it, which is what a lot of today, not only fintech but many other industries have to do. So to me, I think having that freedom that you can actually come and develop a product, or a technology, have it completely regulated, but then allow that someone who is actually innovating to reap the advantage of it and then democratize it. I think to me that if India wants to have, like a lot of people ask, why does India not have an Instagram movement or a WhatsApp movement, or a Facebook movement or whatever, correct? The fact is that would we allow such monopolistic companies to sort of live and let them flourish and then democratize it gradually? I think in fintech we haven't gone to that path. There is so much to be done, and to me that opportunity for the industry should come. And so that we're not building wrappers and features about our technology is fundamentally standardized, and we're just trying to optimize.
In BharatPe, we see all challenges as an opportunity. Now the recent challenge was with respect to our EDI collections we were doing through settlement, and the RBI guideline came, and thereby we cannot do the EDI collection through the settlement. We took this as an opportunity, and we're building a proper, complete subscription module whereby we will be using these EDI collections. We will use UPI AutoPay. We'll build that capability. And we are also working on strengthening our eNet and SIO net banking. We'll build for BharatPe, and then we'll offer to others.
You spoke about the challenge. I would say that the three parts we are talking about here, right? We're talking about payments, credit, and social commerce. Payments is, largely now democratized because of the UPI being there. Social commerce was always there. The challenge that we face is today in credit, because today in India still largely it is the I would say it is concentrated in the hands of certain handful of lenders. And also, if you look at from a consumer side, it's a bunch of consumers who I call them overbanked from a credit point of view, where every lender is actually running after. The challenge here is that how does the ecosystem, of course, within the regulatory guidelines, allow, when we say innovation, allow more access to be developed. And that is a challenge because today large banks or large lenders, they from a right reason from their business model point of view, they are focused only on highly profitable customer segments. And when it comes to penetration, who's actually going to drive that really? I think that question is still to be answered. There are a bunch of us, so many of us here at Fintech are trying to do their things, in their own manner. But I think we still have to see the large movement happening there. And I don't have an answer for that, but that's the really challenge that we face today.
So I think clearly it's the challenge of changes happening over a decade to now changes happening over 5 years or 4 years. That in our tech world working with whether banks or fintechs is the speed of change which we are seeing. And then sometimes we feel that are we keeping up with it? And so while we on one side cry about the fact that speed of change with large institutions is slow, on the other side the speed of the entire, how the technology is kind of changing, newer things are coming in, and newer generation embracing it much faster. India as a population is much younger versus earlier, so the embracing of a technology is much faster. So that is a constant challenge to keep up and be relevant in the new world, because if you're not relevant, if you're not adding value, people forget you and you just move back. So you're just constantly running.
Interesting. So I did hear a mix of, from a challenge standpoint, a mix of the pace of regulation, the pace of course, the technology change, and really how do you ensure you expand beyond the existing consumer base that you're lending to, right? Like who's really investing to go down and expanding that reach and access to the market. So that was super helpful. And now just to wrap up, right, what's the one future trend that you're really excited about and that your companies are really excited to leverage and use the opportunity to grow?
AI is something where we are working very aggressively, and BharatPe is now launching our online payment gateway, and there we are getting this X factor, and whereby we will try and see that each and every client of who use our stack will be given a complete squad of product, tech, and relationship for NPCI and bank, and it will be totally available physically as well as virtually.
We believe that the entire addition of credit-led products on UPI Railroad is something which is a huge opportunity. It started with credit line on UPI. There is EMI products now getting launched, but we believe that the entire ecosystem will develop further with addition of e-commerce players also joining, to provide part of that value chain. We believe that's really going to be the next huge moment coming in.
So for us, from a technology perspective, AI is completely changing things for us. 3 areas. One, we have 700 engineers. Can you do this with lesser number of people? Can you do something different? Can you add AI to your existing products in what shape and format without changing the pricing? And what is really transformational? So across these 3 buckets, there's a lot of work which is demanded, expected, and we're not spending that much money from an LLM perspective. So what really are we doing from an AI, agentic AI, actual use cases perspective? That's an area where there is a lot of pressure and focus, and things are changing dramatically fast in that speed. I'll just give you an example. A loan origination system, which used to be something which was created, basis a specification from a client, then made it into a, the workflow. There's a workflow, and then you can just keep changing the workflows. To today, it's a voice-based system. You voice out what you really want, and the flow gets created. It's a dramatic change from where we were, 5 years back. And all of this has happened in the last 5-6 years, and people like us have to completely rethink how we are kind of thinking through technology and what clients are wanting. Very early days. AI still continues to be a buzzword. And I'm not going to say that we figured everything out, but you will see everything AI. But in the next 2 to 3 years, real solid use cases and actual impact, whether in revenue or in cost sense, comes in and dramatically changes careers for people in terms of how they need to kind of up their game across things. Frankly, in our own organization, we don't see, at least I hardly see emails written by people. Just, ChatGPT, and that email comes in. For even small requests, people are putting it from ChatGPT and putting it. So you just can't figure out who's writing and what is happening. And the pace of change is dramatically fast.
We're also doing something in AI. In fact, from a consumer platform perspective, we thought rather than sort of trying to solve for the future, let's try and solve for what are the problems today. We launched Wiser, which is our AI product, back in January 2025, and we were in beta for 6 months. And now we're moving free form, right in November, where you can come and ask him or it the most complicated questions around your credit life, and hopefully the platform or the product should be able to give you a very, very satisfactory answers. We've been testing on it for the last 12 days, and from the point of the fact that on how many transactions have been refunded, or which bank charged to that highest interest rate, to where reward points were not given to you, or how many days you were charged extra for a transaction, to compare it to the newest credit card that he launches versus the card that I have, and should I apply for that or not, or to close some of my accounts because they're negatively impacting the bureau profile. It does all of it. It's an agentic AI model, clubbed with a lot of data personalization that we have. And it goes open for all consumers next month. We can't wait for it to sort of hit the market and start getting to see your feedback. Some folks who have been interested, we've shown the product today here at GFF in close quarters, but we can't wait to take it to the open market in a month from now. So yeah, super excited about that.
Perfect. So hearing AI is truly going to be the game changer. It's already started, and we're seeing that, right? As the conversational layer, where we see Instagram, WhatsApp, as well as Facebook, we're actually seeing all of this come together. So you can do things. A lot of companies are being innovative. Indigo just launched a voice-enabled ticket booking system, right? Andhra launched all their 700 citizen services on WhatsApp, and it can be voice-enabled, AI-enabled. So it has started to really drive sort of inclusion as well, with all of the vernacular support that AI is now providing, and really these seamless experiences, right, which you would have taken months to otherwise code, change, tweak in 20 different languages that you may get. So super, I think that's definitely one area. So I think just wrapping up sort of the panel here, did want to call out some of the key insights that we took away from the panelists. So we are seeing a convergence of really payments, credit, social commerce coming together. Payments has really helped build the trust layer, is the trusted rails on top of which a lot of these digital sort of economy now is thriving. Credit has become more, from the whole collateral heavy, situation. It is more embedded, and it's using a lot of more, alternate data, also building up on UPI. So it's the whole credit line on UPI, credit cards on UPI. That's really helping take UPI users to the next level as well. And then what's actually bringing all of this together is the social conversational platforms, right, which aren't in silos anymore, be it the ONDCs, be it Instagram, WhatsApp, Facebook. That's really sort of building the layer and creating sort of new lines of where all of these things sort of come together and enable more accessibility to power growth for the next 500 million users or SMBs. So thank you, panelists. Thanks for the time. And feel free, the panelists are here if you guys have any questions, etc., that you would have. Perfect. So we do have some time for. I have. Let me check.
Any questions, anybody? We can wrap the session up.
Thank you. Thanks, everyone.